All right. Hey there. Welcome, everybody. Beards and Bitcoin. It's Wednesday. Apologize that we missed last week. I got, I'll be honest, I dropped the ball. My schedule got screwed up and I kind of let everybody down with that. But we are back this week here. And so excited to have Andrew and Tillman with me. We'll pull them up here in just a minute, guys. So what we're going to talk about today, really, we're going to look at things like Morgan Stanley. Finally, Andrew wrote this a few months back. That they were going to come in and be offering Bitcoin to their clients. And then it's taken them this time to get through all the last minute stuff that comes up and do all that. But now we're also talking about potentially Wells Fargo looking like they're going to be following pretty quickly here as well. So we've got that and some other stuff. We have the big dip with Bitcoin that just happened. But for now, why don't you all help me welcome here, Mr. Andrew and Mr. Tillman. How are you gentlemen doing?
Doing great, man. Doing great.
Man, what a dip, right? I mean, this was the opportunity, right? We should all be buying that dip, right?
What did I say on Melker's show? The tears of retail fuel the rocket ship of wholesale or of big buyers. So this is to be expected. The thing that's interesting to me about it that really I haven't heard many people talk about is the timing, right? I don't think they could have pulled this off during ETF trading hours. I think it would have been absorbed pretty quickly. I think that we're seeing a very strategic attack on the price in the overnights, on the weekends. That's to be expected. But the bounce back is also to be expected. I mean, if you're not looking at these types of things with buying eyes and with, I just look at it as the thing that I like to buy is now on sale. I mean, if anything else in your life that you really love, whether it be a certain brand of potato chips or a certain brand of clothing, if it goes on sale, you're happy. But there's some weird psychology to trading where it flip-flops somehow. I don't understand it.
Yeah, exactly. We want to buy when things are high and we want to sell when they're low. But obviously the way to win in the markets is, to change that thought process. Obviously it doesn't mean, that you buy every time it drops, but, it's a shift in attitude. And so one of the big things for me, I guess, before we get on to the other Morgan Stanley stuff or whatever, was I've been kind of on a lot of shows this week talking about it, but when we had this happen Sunday night, when we had that drop, and my first thought was like, as it kind of went through, I had this feeling like, okay, it didn't feel like it was a full-on panic. It felt like it was an overreaction maybe. But I was watching the Monday Open. My thought is, listen, this happened on the weekend. Legacy is shut out until markets open on Monday. So when New York opens, if this is legit, we're going to see immediate selling going on there. But we didn't, right? We saw it immediate just rally back up, left nice long wicks on a lot of these. And we've seen, this continuation up higher, since then and working its way up. So I felt pretty good about it.
We shot back up from 49 to 54 inside of, 49 to almost 55, 56 in about, 20 hours.
Yeah.
I think I put out one of the tweets that I like to do about, BTC in the morning, BTC in the afternoon. And it was like, the classic Ben Affleck, standing out there with a cigarette, his life is ruined. And then, BTC at night, he's in a tuxedo pointing at somebody smiling, right? And it is, it's good to be reminded of kind of old school classic Bitcoin price movements.
Yeah.
So we got a little bit of a taste of that over the weekend. At the same time, though, people have to be aware of the macro. And again, since Bitcoin is part of, the larger conversation in traditional finance now, it's the one thing that if you think that there's a quote unquote panic coming globally, you can't sell any of your holdings that are tied to a 9:30 to 4 p.m. trading time frame. So, okay, well, maybe I'll sell some of this stuff and put it in cash so that I, am curbing the potential downside. And so that's the reason why Bitcoin moved the way that it moved in such a meaningful way. I do the thing that I find probably most compelling in the last 72 hours is that you did not have any outflows from BlackRock's Bitcoin ETF.
Yeah, they were flat, right?
Yep, they were flat, and yesterday's haven't. I still don't think yesterday's have been reported, but on Monday it was zero. It was a net zero. That just goes to the truth that boomers and Gen X have been taught. It's been pounded into their head ever since they invested a dollar that you buy and hold. You buy low and sell when you die, not sell high. And so that truth of that, people don't think about Bitcoin ETFs still as being in the hands of traditional investors. They still think they hear the word Bitcoin and then they think crypto Twitter guys, like this is how they react. And it's just not the case at all. You've got a really remarkable, asset that's performed to the tune of 30 to 50% since January 11th, and it gets hit by 15 or 10% on any given day. And so what? People are probably just putting more money in. And so it's that dynamic played out in real life on Monday and Tuesday, and probably again this week. There's going to be net inflows to the Bitcoin ETFs for this week. I guarantee it.
Yeah, I think it's a two-edged sword that's cutting to our advantage on both sides. And what I would say, why I say that is, look at in the past, right? Bitcoin, we've seen moves 40, 50%. What was this, a 20% move?
Exactly.
It really wasn't even, compared to what Bitcoin's done in the past, it wasn't even a speed bump, to be honest with you. And the bounce back even made it less of a speed bump. But here's the thing. Look at what happened to the traditional markets. NASDAQ, historic drop. S&P, historic drop. Dow, historic drop. All of the above, either they're getting more volatile or Bitcoin's getting less volatile or both at the same time, which is my argument, which I think is a very, very unique thing that we have never experienced before. I mean, Bitcoin being the most stable asset in a global financial flash crash. I mean, think about that. I mean, I don't know of another asset that didn't have more a less violent pullback than Bitcoin did.
Yeah. And a friend of mine, Alex Kruger, I think you guys might know him. If you guys are watching, you can follow him at Kruger Macro, KRUGERMACRO.
He's the Galaxy guy, right?
No. He's got his own companies. No, he's not with the big companies, but he's got these great. What's hard for us to find, especially in all the noise on social media, are these great level-headed approaches, right? Mm-hmm. And so a couple of years back, when I spoke at a conference almost at the dead bottom in 2022 over there in Vegas, he was there as well. And so we kind of finally got to meet in person and talk and whatnot. But we both at that time discussed how the bottom was likely right about where we were and that things were going to be rallying up and what was going to come in the next year. And of course, all that played out. But he posted this excerpt from Goldman's Flow Desk at the end of Monday, which seems to kind of suggest, again, the same thing, what I was talking about, what we're kind of looking at, which is they said in terms of phones ringing and investors trying to get a handle on things, we're having our busiest day of the year. But from a trading perspective, we aren't. We think it's a tactical and systematic unwind, mostly driven by quants and levered retail. Very little panic in our flows from institutional perspective. And again, that goes back to what we would have expected. You guys have been around long enough, with all the markets and whatnot as I have. And again, when this thing popped off on Sunday, if it was truly legitimate, as far as things, then the minute New York opened on Monday, they should have been selling right into it. They should have been seeing, circuit breakers tripping. Right. And again, we didn't get that. So I think it looks pretty good right now. Obviously, we have to go higher and get a little bit more confirmations, but I'm feeling pretty good about it in terms of structure and whatnot on the charts there and the movement and what we've seen so far. We've had some really crazy retracements from things like Solana, just huge rally back off. I think they were up like 40% off that swing low. Completely took out, the first that all that business right away. So a lot of good bouncing back into it. What do you guys think? So, the first thing we saw a lot of was people like, oh my God, the Fed's got to come in with the emergency Fed rate cuts. Oh my God, it's going to be, 50 points on Monday or Tuesday or whatever. And then 100 points on, 100 basis points on September. And my first thought on that is, okay, if this, at least if the yen carry trade unwind played a part in this, which I believe it did, it played a part. I don't think it was the main driver. I think it was just a whole bunch of fear for 2 years, everybody's been talking about recession, here in crypto, especially for the last 5 months, people have been talking about a cycle top. And then we had, the little bump up in unemployment, which basically keeps it around, historically full employed level. I think that played a lot more. And then, of course, we had the potential. We had Iran threatening by Sunday or whatever to drop drones and missiles and bombs and everything over in Israel. And I think that all kind of played to it. But my thought was, why would the Fed get involved here, right? If it's the unwind, if it's the yen carry trade unwind, the last thing the Fed wants to do is drop the interest rate, because that's just going to exasperate it, right? It's going to close that that gap that they were using, to fund even more. So, made no sense to me. What do you guys think about that?
When it doesn't make sense, there's typically another motive and/or culprit. So I don't buy it. Is I guess what I'm saying. The timing tells you everything. When could you have a brute force attack on the price of Bitcoin and be somewhat successful with all that's going on in the traditional markets and the adoption of Bitcoin, on a daily basis, the inflows? You'd have to attack it on Sunday night or Saturday night. And you'd have, so I just, listen, the price is the price. And when the price drops drastically, whether it's caused by, whatever, a lot of people start to panic, and that's the natural culling out of the herd. That is a healthy market. If somebody doesn't have conviction in Bitcoin enough and/or is too leveraged in Bitcoin to not withstand a 20% flash crash, then guess what? That's gonna. I bet the next time they take a position, they're gonna have that knowledge in mind. And we've all been there. We've all gotten spanked. It's not like a lot of my friends are going, well, why aren't you panicking? And I said, because I've gotten spanked enough. I know the market's capable of doing crazy stuff. Like, let me paint the scenario. And I almost felt it, honestly, when we're at the Bitcoin conference and people are talking about national strategic reserves. I mean, you can taste it in the air. It's so palpable. You have to think, it can't be this foreseen. It can't be this easy. You know what I mean? Because if you had asked anybody at the Bitcoin conference, what's the price of Bitcoin going to do in the next couple of months? Everyone would have said 100K by the end by October 1st. It was a really it was a huge stride forward for our industry in a lot of ways. The smartest people in the market that have the money and the capacity and the capability to carve a piece of Bitcoin out for themselves in a meaningful way have to do it on the tiers of retail, have to do it by invoking fear to a level that causes panic. And the panic is a domino effect that gets a lot of people to cough up their positions. And I hate to say this, but that's going to become the most viable tactic for nation states to acquire the amount of Bitcoin that they're going to want to acquire. Think about it. There's only 21 million of them. God knows, let's say 2 million have been lost. It's probably more than that, but let's just say 2. So you're down to 19 million of them. And if nation states start to compete for them, how do they maintain the fact that they want Bitcoin to be a store of value or a wealth preserver, but at the same time acquire enough for themselves? Well, the only way to do that is over a long time cycle through very violent swings through that time cycle. That's how you do it. And so, the bottoming of a cycle, whatever it is, that's what that's about, is accumulation of positions. And someone during this period accumulated a lot
Yeah.
of Bitcoin. That would be my premise.
Yeah. Those charts they were showing from on-chain analytics showing absolutely huge accumulation in this dip right here. I mean, just prior to anything else, I mean, just absolutely huge. The number of these wallets increasing to have these large holdings of Bitcoin now. So, yeah, I mean, again,
those people aren't stupid is the best
right.
way to say it. All of the macro is just pointing towards higher prices over longer periods of time.
Yeah.
And that's where people make real money. Some of the most successful and well-known hedge fund guys over periods of time, they say, how have they made their real fortunes? Their real fortunes have been made by having the balls to hang on to bigger and bigger positions longer and longer and longer. In other words, have your winners run longer than anybody else's can allow them to run. And that's what Bitcoin has been. If you bought the proverbial 20 to 50% dip on Bitcoin every time over the last 6 years, you've got a lot of Bitcoin.
You've done extremely well.
Bitcoin.
Yeah.
And so that's why I'm not surprised that these dips are eaten up so quickly. I mean, there's still going to be a range. There's still going to be movements sideways, up a little bit, down a little bit. There's still going to be price movement, but at the same time, we've just onboarded in earnest to the entirety of Morgan Stanley's platform.
Yeah.
With that happening, yes, it's a big deal that you're talking about $2 to $5 trillion in assets that are now available to have small percentages put into, two Bitcoin ETFs, BlackRock and Fidelity. But more important than that is Morgan Stanley is or the leader in the wealth management space from a branding standpoint. So you can't have a product only on one platform in that business. Everything is commoditized. So all of their competitors will have to offer it at some point. So over the next few weeks to few months to a couple of quarters, spot Bitcoin ETFs will be available to trillions upon trillions upon trillions upon trillions of assets. Now, some details that I mentioned in the post that I did and some questions that were asked in the replies that I've answered. Somebody asked, okay, so this is now available, for Morgan Stanley clients at large. Well, are there any other restrictions or other, anything else going on? And there are some. And so I'll go through those. One, you can't hold spot Bitcoin ETFs in your IRA as of yet at Morgan Stanley. So that's still a bit of a smaller silo, right?
Yeah.
Also, they internally have put restrictions that the allocation that they're allowing people to make inside of their account is only up to 3%, right? So you can't have more than 3% of a position in your total portfolio of spot Bitcoin ETFs.
That's really not a bad number to start at, honestly.
Yeah.
No, it's not a bad number. And some might say, well, who are they to say that, I can only have 3%? Well, they're a business that is allowing you to do business on their platform. If you want more, they can say, here, we're going to send you a check now. You can take your business elsewhere. They have the power to do that based on the documents that you file.
So let me ask you this real quick here, Andrew. So there are 15,000 advisors, huge, absolutely huge. And they're saying, okay, listen, 3% max in there. Now, I know you're going to get onto it here. We're talking about Wells Fargo potentially falling in here pretty quickly and, and other platforms, as you just mentioned. Do you think that they're going to follow along with maybe a 2 to 3% max? Or do you think some of them may jump out, they say, well, no, you can do more?
Yeah, I don't know. The other small restriction that exists in Morgan Stanley is you have to have a net worth of 1.5 million. Now that's a bit of a misnomer, because if you take out their E-Trade acquisition and you just look at Morgan Stanley proper, The average account size per financial advisor at Morgan Stanley is probably close to 1.5 million anyways. I know several years ago it was like 1.1, 1.2, and markets have only gone higher in the last few years. So their average account size is close to 1.5 million anyway. So that's not really a restriction, but it does exist. Will Wells Fargo broaden that particular scope? I don't know. That's a way to be a little bit more competitive. But the point that I'll make again and again is if Wells Fargo broadens that scope, you can bet, 2 months later, Morgan Stanley will adjust their restrictions to meet that particular demand that Wells Fargo has done, right? Those companies, Wells Fargo, Morgan Stanley, UBS, Merrill Lynch to a lesser extent, I mean, they just flat out, it's an all-out war to keep clients, to gather assets. They constantly are moving big advisor teams back and forth. Yep. They pay tens of millions of dollars in bonuses for one guy in Chicago to move from the 5th floor to the 12th floor and work for a different company and bring all of his customers, right? Yeah. That's how that business works. And when I say that things are commoditized, they truly are commoditized. You have the same products, the same access, the same boxes to put accounts in across the board. So it's very, very, very competitive. And so one of those organizations is not going to meaningfully move, way out in front of the crowd and set a new standard. That standard will creep over time. Think about it. Yeah. Morgan Stanley has opened up their full platform, but they've only chosen BlackRock and Fidelity. Yeah. They haven't opened up to everybody else. Why did they do that? I don't know. They're looking at being the first to open this up, but also let's mitigate risk a little bit. What if is there a big hit, right? Well, you can say, well, it's not our fault. BlackRock and Fidelity, you got a bunch of their products in your portfolio as well that aren't Bitcoin, and talk to them, right? So, it's an interesting process, but it is a net plus for, again, long-term, the price of Bitcoin itself, and Bitcoin ETFs to be in that asset pool in earnest now.
Yeah.
It'd be interesting to find out how many clients of theirs are north of 2 million net worth, because that's the price point whereby which you could own one Bitcoin. And I think psychologically that still is in a lot of people's minds. And if you could do some analysis against total number of buyers looking to own one Bitcoin within these, these advisor firms, I think it would be a pretty telling tale as it pertains to the scarcity of Bitcoin.
Yeah, and I think the 1.5 million is kind of interesting. It's almost like they're going, okay, well, here in the U.S. to be an accredited investor, you have to have, $1 million, a little bit over $1 million in wealth, outside of your home ownership. So, kind of interesting. They're almost like they're saying, well, we're going to do this, but we're going to kind of follow what the SEC says over here with everything, to get in there. And so, I guess it makes sense, still, Bitcoin ETFs, new product for them. And let's face it, as we've said multiple times before, Bitcoin is still new. It's 15 years basically in existence, and it's grown so fast over that 15 years. So, it makes sense when you think about it. It makes sense when they have a limit on wealth, that you have to have a minimum. When they say, okay, you can only do a few percent. I think the only thing other than that is, how many of their and not just with Morgan Stanley, but again, if Wells Fargo is going to come in pretty quickly here and follow up as well, how many of their advisors are actually going to be pushing Bitcoin? Morgan Stanley, 15,000 advisors, probably not all 15,000 are going to be pushing. You got older guys in there that are stuck in their ways, and they're Charlie Munger, they're Warren Buffett.
Well, you don't just have older guys that are in there. Financial advisors as a class of professionals are on average 57 to 62 years old. That's the age of that a class of professional, and there isn't a meaningful wave of young folks coming behind them. There's been a push for that to happen for a decade inside of these organizations to try and bring on a younger subset of employees. But that is a significant risk associated with these organizations in terms of retirements and who replaces these folks. It's often why you have financial advisors that are work past 68, 70, 75 years old, because, they can have a team of six, three other advisors they work with, two, CFAs on their team, and two admin staff. And the head guy, who's 72 years old, doesn't do much more other than come in 4 hours a day, read the paper, and take two meetings. I mean, you think that's a joke. I mean, again, I was in the industry, know the industry very well. That's a very real thing.
Yeah.
So is the 72-year-old reads the Wall Street Journal and takes a meeting twice a day going to be talking about Bitcoin in people's portfolio? No chance.
Exactly.
No chance. But over time, the scale of the pool that these ETFs are now going to be swimming in, even if it's just a trickle of that pool that's flowing itself into Bitcoin ETFs, is really substantial.
Yeah. And I think that's all great points, which is why I want to bring that up. Again, we make a lot about it because it is significant that Morgan Stanley is bringing that on there, but we also want to temper expectations to really understand that, listen, not all 15,000 are going to be pushing it. And even though there are limits and expectations as far as, what Morgan Stanley puts on it. And then of all those, not everybody's going to buy. So, I think, the bigger story, again, as you've said a lot of times, is it's not about what happens today. Yes, they start doing this today, but it's what does this mean over time?
Well, also understand that the kind of the dynamics and architecture of 15,000 advisors at Morgan Stanley. What really is the truth is there are probably about 6,000 to 7,000 teams that exist at Morgan Stanley that are making representations to clients. Okay, so there aren't 15,000 individual advisors with 200 clients each, and all 15,000 are doing this, that, or the other. Again, over the last 15 years, these institutions have pushed advisors to create larger and larger teams. You can even go into some of the industry magazines and talk about super teams where there's teams of 20. And so that's been a real push, and they're incentivized to do that. Their payouts are higher when they do that. So you're talking about probably 6,500 quote unquote teams that are meeting with clients that are then making recommendations. So 15,000 is the head count. 6,500 is probably the actual real number of sitting around a conference table having conversations about quarterly reviews and asset allocations and the like.
Yeah.
Well, the drive isn't going to come from the advisors as much as it's going to come from retail, right? It's just this slow drip adoption. A rising tide floats all ships. You can't stop. The cat's out of the bag. You can't stop the moving train. The dam has broken. All of these analogies apply because the approval's the hardest thing, right? Getting it integrated in a system that's as large as these systems are, and getting it on the menu, so to speak, it's not an easy task. That's the heavy lift. The retail consumer that then hears, oh, I can buy Bitcoin and I can, again, we talk about how old is Bitcoin. Bitcoin is less than a year old in my book. And here's why. Because all of the growth before now has been a pain to custody. You couldn't trust the people that were in custody of it, right? And or you had to burden the custody of it yourself.
Yeah.
That has changed, and it's changed through in the last 12 months. That is a material difference, and this is just an extension of that, right? It's more trusted people that will hold your Bitcoin for you, so you don't have to deal with the blockchain and have to deal with the
seed phrases and the like.
The hardship that comes along with it. And it's push button tax reporting. Like there's just a convenience
Pain
level
in the butt.
that, yeah, I mean, yeah, what a concept. I mean, but it's everything that we were hoping, and that's the hard part about the Bitcoin community, as far as I'm concerned, is they kind of don't know what they want in some cases. If you rewound time and you asked every Bitcoiner 5 years ago, would you want Larry Fink being the spokesman for Bitcoin? Would you want every ETF to be the most popular, successful ETF that's ever happened? Would you want the politicians of the world to be staking their flag on Bitcoin's mountain? Like all of the things that we've gotten to experience, would you want the price to be close to all-time highs and have a proven stability during this cycle that that we haven't seen through any of the other cycles? I think most people would say yes, that means adoption, that means that. But at the same time, we also love the fact that Bitcoin's sovereign and that it's
Yeah.
self custody and it's all these things. So the truth is that Bitcoin and Satoshi saw that, and he allowed it to be capable of functioning on both sides of that equation. You can use it self custody, and you can choose that route, and you can bear that burden for yourself, and it will never change. No one can ever keep you from self custodying Bitcoin, because the nature of the network provides you that freedom, right? And that's what everybody loves about the network. But on the same token, the masses aren't built for that. So we have to give the masses what they want, which is ease of use,
Yeah.
easy tax reporting, regulatory clarity as it relates to who's custodying the Bitcoin and what happens if they lose it. Like all of these things that allow systems to really gravitate towards scalable growth. I mean, we have to have that if we quote want to see the $1 million Bitcoin. So we can't have it both ways. We can't have this. We can't say to the world, we want you to adopt Bitcoin and we want everyone to have it, but only if you self custody it. Yeah, okay. Good luck with that mantra. That's not going to work.
That's that's I love that you bring it up, because that is the same argument I made back in the day, right? Before last cycle, when I said, listen, this cycle we'll probably get the institution involved, whatever. But I said the one thing we're going to need to do if we're going to get everybody, really a big group of people involved, is we've got to make it easier. We've got to make it less scary. I've been doing this for years. I still take a deep breath, say a little prayer before I send off any kind of crypto anywhere, right? Because you can always get that stupid long address wrong, or get it on the wrong chain. Heaven forbid you're sending it, USDT through something. Are you sending it on, Ethereum? Are you sending it on Polygon? Or you send it on whatever, and you're losing it once it's gone. And so, again, what you're saying with this institutional involvement, getting the ETFs out there, it gets rid of all that difficulty, and it makes it easy for people to make the decision to buy and sell.
And there's a small point that Tillman made there, that people don't think about until you have to think about it. And for example, that's tax reporting, right? So I was having a conversation with an arch public customer of ours that, so I'm going to do this and I'm going to do that, and I'm going to, because we're about to announce a crypto platform partnership and a product that we're going to be announcing as well. So we're talking about the differences, and asking questions about tax reporting. I'm like, well, on TradeStation, the tax reporting is simple. It's a click of a button. You get whatever the tax reporting you need in a PDF in seconds, and you're off and running. Just hand it to your accountant. I'm like, on this other platform, and he's like, well, yeah, crypto platforms don't do tax reporting. You got to do it yourself, and you just, I don't know how I'm going to handle that. And so you think about that, right? Like, if you're a person, if you're a high net worth or ultra high net worth individual, that again adds, some level of certain issues associated with being involved in the space. Is that, okay, I can't just push a button and get a tax document that's easy to understand and I can just hand it to my accountant. I've got to, back of a napkin, I've got to, find a way to figure this out myself, or hire an entirely different tax company or tax person that is crypto native and knows how to do it, which will just cost me more money. So it's, yeah, that particular issue. At the same time, again, it's the reason why Bitcoin ETFs, for the larger portion of folks that do want exposure to Bitcoin, they will migrate to that particular set of products, as opposed to holding spot Bitcoin, on a cold storage wallet, buried in their backyard. You know what I mean?
Well, the branches on the tree are expanding faster than we can even count them, because there's this new expansion opportunity for holding Bitcoin. I can hold it in an ETF. I can hold it in a self-custody situation. I can also buy MicroStrategies or any of the other publicly traded companies, including mining stocks, that carry Bitcoin on their balance sheet to a large extent, that give me a leveraged play on Bitcoin. So there's and think about the number of those products being added every day. Think about the amount of companies that are taking hard looks at, should we hold some Bitcoin on our balance sheet, and what that's going to look like going forward. Well, that to me is an incredible source of buyers at a very large level. I mean, you talk about some of these other things that people think are really sexy as it relates to nation states buying Bitcoin and yada yada yada, but for-profit industry will, if it works, will give you the most consistent buyers that ever existed, because people like money and you can count on it. So I think that like that alone is going to be a massive tidal wave of liquidity that's only going to grow. And now, if Bitcoin, continues to go down in price or goes through a bear cycle, obviously you're not going to hear the sexy headlines, but I guarantee you'll see more corporate buyers during those downturns than you've ever seen in any of the other previous downturns. Because I think, like to Fred Krueger's perspective and a lot of other guys that are pretty sophisticated, it's been de-risked for those types of investments. If you're a whale, if you're an institution, if you're the University of Texas and you've got an endowment sitting there of God knows how much money, and you know that you should be allocating some of it to Bitcoin, but you aren't going to be buying at the highs, well, if it starts crashing, the last cycle, they're not buyers. This cycle, they may be buyers, or the equivalent of them will be buyers. So I just think we've entered in kind of the too big to fail category, or very close to it. And that's that's a pretty optimistic place to be as far as I'm concerned. And especially when you look at like to the outside perspective, if you're looking from Larry Fink perspective, and you've not ridden any of the Bitcoin roller coasters, this last one looked like a doozy. This one was the kiddie ride. This one is like fun and games. The last crashes, just to put things in perspective, you were wondering if all of the exchanges were going to shut down and not let you sell, and or you couldn't sell because they locked you out of your account, and you just were watching the knife fall to eternity, to the pits of hell. So it's like, that doesn't even exist anymore. And that is yes, you couldn't sell on Sunday night if you have an ETF. You're right. But the source of foundation that provides the price on Monday morning, looks like it was pretty good, but time will tell.
I will add that anytime Tillman uses the term doozy, I'm gonna go into my personal bag of stories here as I carry this particular stream. So I went to Liberty University and I played basketball at Liberty University. And I had an apologetics professor. You may know Liberty is a religious institution, and he used to talk about one of his favorite desserts was to go get a doozy cookie at one of the local bakeries. And a doozy cookie was a 3-decker layer cookie that had big cookies, and in between the cookies, a significant amount of a frosting, right? And that was a doozy. So anytime since the time I was 20 years old, I hear the word doozy, I immediately think of sitting next to one of my teammates in that class. And when that teacher would talk about doozy, he would create a picture of a doozy that was like a cookie here and a cookie here and a huge amount of frosting.
Yeah, a doozy in Texas is the Texas way to say anomaly. It's just it's a doozy. It was out there.
So it also, that particular professor wore probably the worst toupee I've ever seen in my life. And so that in and of itself was also a doozy. So the idea of him going into a bakery with the toupee, in a suit and just he's got to have a doozy cookie. That's just, just brings a little bit of joy into my life when I
write that in your Seinfeld new episode.
Yeah. So these are the things that, if somebody comes to me and they need a package of life stories to make their life more interesting, I can sell these life stories like Kramer sold.
You're missing why people come. It's not to make their life. It's because it's very endearing. It's like the grandpa who sits you down on the knee and tells you a story that you're kind of wondering why he's telling you, but at the same time, it's somebody cares enough to talk to you about a long story about their life. So.
Well, we definitely don't have toupees. None of us have it. The hair's coming out on the face, not on the top of the head, right? So that's why we're sitting here the way.
I think when you're bald, you have to grow a beard because it's the only thing you've got left.
Yeah.
It's like,
right. Going back to Morgan Stanley and Wells Fargo and what'll happen with UBS, I think it's a 24 to 48 month story that we'll see trickles that will happen in spot Bitcoin ETFs, but there will be a flashpoint, just like there has been with other asset categories, right? So who was allocating to technology and internet based stocks and mutual funds back in 95 through 2000? There was a flashpoint 98, 99 where people were shoveling money into it because it was just going straight up. Like people were making so much money that they were talking to other people about it and saying, I don't know what, if it's got internet in the name of it, I'm just putting my money into it. Right. And so I think there'll be a flashpoint. I've talked about from time to time that I think by the end of the year we'll be at 80K on Bitcoin. I still don't think that's a flashpoint. That's just, about 10% above the highs that we've already seen this year. But I think, Q1, Q2 of next year, depending on how the election goes and the like, if we get past 100K, I think that'll be a flashpoint. I think people will find themselves, wait a minute, what? Bitcoin's at what? Okay, I got to get some. Whether or not that's the right way to think about it, of course it's not. That's how retail responds to pop culture finance. And that's what Bitcoin at some point will be. It will have another pop culture moment. And, retail will find themselves, scratching and clawing to get into these products. And the fact that they'll be available in the wealth management world in a pretty broad spectrum will be meaningful and interesting. The next thing that we should keep an eye on is, Morgan Stanley's important, sure, Wells Fargo's important, UBS. But you have to understand that only about 10 to 15% of the financial advisors in the United States work at those big companies that are called wirehouses in the industry. Most people work at regionals or independent/RIAs. So you have another 65 to 80% of the industry that doesn't work at these large named, well-known brands. They work at Ameriprise. They work at a company called LPL, which I bet 97% of the people listening to this stream have never heard of LPL. Well, LPL has 20,000 advisors that work underneath its umbrella. Edward Jones has 16,000 advisors underneath its umbrella. Robert W. Baird, Stifel Nicholas, Ameriprise again
that's
has
all fundamental knowledge. Like if you're looking fundamentally, you can't go wrong with all of what you just
Right.
said. I mean, that's a tidal wave of activity
Mhm.
that has to be buyers, right? No investment advisor is going to present to their clients, you want to short Bitcoin. So
Correct.
it's all buyers that are in those conversations, which has to be good for the price of Bitcoin.
Mhm.
The thing that is more in line with like what I liked when I hear you say that type of stuff, the things that come to my mind are, okay, if the stability of buyers is gaining traction day by day, if the legitimacy of Bitcoin is being adopted by that legitimate group, then the violent swings have to be now more targeted towards leveraged buyers of Bitcoin. That's where the only place they're going to be able to shake the tree out. Because if the ETFs are providing more stability from a long-term holder's perspective, we're going to see more violent action on the weekends than we've ever seen before, and we're going to see it when the metrics are telling us that people have extraordinary leverage in their positions of Bitcoin, because that's the only way to get people to create new Bitcoin at the rate that they need to acquire it. The miners can't produce it at the rate that they need to acquire it, so they got to get the markets to cough it up. Well, people who are holding it in long-term retirement at less than 3% of their portfolio, they don't care. Even if if they max it out, they're at 3% exposure. And if it goes down 50%, they're down a point and a half. They're down the fee they're paying their broker, their management company. Like, come on, it's a no, there's zero risk there. No one's going to be coughing up positions in that. So it's I'm going to be looking at based upon what Andrew's talking about and kind of the trajectory of this rising tide, at what the risk level looks like on the weekends going forward, and what metric I can tie to the violent swings downward that cause liquidity events to take place through essentially wiping out leveraged positions. Because Michael Saylor taught me a really valuable lesson. I saw him speak, a couple years ago at the Bitcoin conference when he was like the, hero amongst heroes. And then we got to see everyone who's anybody target his puke-up price of 17K. And he it went past that, and he hung on. He figured out a way to do it, and he was doing it on leverage.
Yeah.
Now, I don't know how much leverage exists out there right now, but that's going to be the only way you're going to be able to take substantial hordes of Bitcoin over. Because look at Saylor's position. If he hadn't have made it out of that and had to cough up the Bitcoin through margin calls, that Bitcoin now is on the streets available to buy.
Yeah.
And so if that's the game, based upon the fact that during 9 to 5 business hours, Monday through Friday, you can't mess with it because the inflows are too great, seems like that's going to be the only place to mess with it. So I'm going to be following that going forward.
Yeah, I like that, man. I got a question. We got a question here. It says, Chris, y'all have mentioned there would be a price disconnect on non ETF Bitcoin, basically with spot Bitcoin, and then the Bitcoin as we've talked about. It says, do y'all think Wall Street also accumulates that that non ETF Bitcoin, or is that non ETF Bitcoin that we're talking about only for individual and business holders?
Yeah, I'll let you conspiracy theorists take that one. Go for it. This is one of Tillman's favorite deals. Yeah.
Well, listen, it's a natural evolution of markets. The market is changing. The market is changing in the ability to hold Bitcoin. And that ability to hold Bitcoin has different flexibilities attached to it. So I think there is going to be an uncoupling in price between Bitcoin ETFs and Bitcoin itself, or self-custody Bitcoin. In order for that to take place, there's only one other option: that the ETFs are going to sit on so much cash and prop up the price of Bitcoin to the market price. Like, they're going to just basically make the market and be bigger than the spot price, right? That's the only other way to control it. You either have to have more liquidity than the spot price and become the market, which I think that's probably the natural route that they're choosing, or you have to have a disjointed price. You have to offer a discount based upon the fact that you couldn't sell on Sunday night. You know what I'm saying? So if you, let's say on Saturday, I don't know if y'all heard the rumors, but I heard the rumors all the way to Thursday. Like, oh God, this weekend's gonna be rough. It's gonna be the breaking point, blah blah blah. You know, and I never listened to that stuff other than just I like to hear it. But sure enough, markets crashed, right? Well, if you were in self custody Bitcoin, what would you do? You'd transfer it to a stable coin, and you'd sit there and you'd buy back at 48, and you'd make a bunch of Bitcoin, right? Well, you couldn't do that in your retirement account. You couldn't do that as an ETF holder. So there's a discount that has to be appropriated, or you have to give some other perk that equates to the same monetary value in terms of like leverage on your Bitcoin ETFs. So you get to borrow a lot at a very reduced rate so that you give up some on it. But there has to be an equal commodity in order for there to be an equal price. If there's not an equal commodity, there's not an equal price. And right now, there's an anomaly in the market, and that's not efficient, that will get fleshed out. So I don't know if that answers the question or not.
Yeah, no, and I mean, and thinking along that way, I mean, I guess we can even bring up that Michael Saylor just announced that he holds over $1 billion in Bitcoin personally. So, you're going to have people out there, obviously, that are going to believe in it like he does, like I believe we probably do, that are going to collect quite a bit, as it becomes possible. But yeah, I mean, I think, I think the focus is, on what is your business, right? The business of those other types is not necessarily the same business as you and I. We view at it, as that self custody and holding on to it for the most part and whatnot. We see there's advantages to the ETFs there, but at the end of the day, we're more focused, toward that holding that Bitcoin ourselves. And so, yeah, so I think, if we look at that, I think most will generally tend to stay in their lane, I guess is probably the best way to say it. But, you're going to have those that are going to still believe in that whole, listen, I want that spot Bitcoin myself, even though my company does this other thing.
Yeah, the wealth management firms are going to continue to evolve, right? So we're talking about, small portfolio allocations to, just to spot Bitcoin ETFs, but they're going to have change forced upon them in the way that they treat people that have reasonable amounts of their wealth in Bitcoin, because that's going to happen. The difference between 10 years ago, 5 years ago, 3 years ago, and even now in the size and scale of the people that own Bitcoin, at a certain level or above, at some point, it's going to be in the interest of wealth management organizations and banks at large to assist in the process of profiting, not just from number go up, but from Bitcoin as an asset. So to give you an example, there have already been exemptions that have been given out but not announced to SAB 121, right, which will allow GSIBs or globally significant banks to custody Bitcoin, right? And so I'm aware that Goldman Sachs is going to be one of them, and probably a few others. Goldman Sachs, by the way, has significant equity interest in custody companies like BitGo, by the way. So, and this is something that I talked with Fred Krueger about. Both Caitlin Long and I talked about Fred Krueger about. Is there's a world by which, at some point there's going to be, lending standards associated with your Bitcoin position. Right?
100%.
Banks will be incentivized to do that. No different than, again, 20 years ago, there was not a meaningful, significant line of business associated with securitized loans inside of these institutions, where you were giving out loans based on your portfolio value of securities, right? Securities-backed loans. Now it is a major part of the conversation at all of these institutions, that as an advisor, it's not mandated that you do these products with your clients. But let me tell you what, you are incentivized to put these loan packages in front of clients and say, hey, let's give you an extra 20% of your total portfolio value in a loan. It's just backed by your securities. It's not a big risk. You're not doing 80% or 50%. It's just 20%. And it's extra cash. You can use it however you want. You just put it in your account, use it to buy more, buy on dips, or use it to buy this or do that, or do nothing with it. But it's available to you. It's an add-on to your portfolio, blah, blah, blah. You don't think that at some point there's going to be structures associated with, you know what, a third of my clients own $10 million in Bitcoin. So we're going to create products and loan products that work for the bank and make money for the bank, because sitting there in spot Bitcoin isn't making any money for the bank. But a loan associated with Bitcoin does.
When you walk in I majored in finance at University of Texas. So I'm going to give you guys the first thing they told me in Finance 101, which was that time is money, and that there's a value of time against money called the time value of money. And what you're just describing is what the markets have already done in the form of staking. But now we're just getting the legitimate staking products. And it's funny to see this full circle evolution. Like, we already know if you hold a hard asset that you should be able to earn interest on that asset. Everyone knows that. That's economics 101. The question is can you do that with Bitcoin until now? Well, you can with these crazy staking pools and stuff like that. But this is this is the next step of legitimizing our market. This is just an evolution at warp speed. We are seeing new products, new avenues, new leverage plays, everything is new, and including what you're talking about, Andrew, which is attaching time to the holdings of your Bitcoin and getting paid an interest rate, both getting paid an interest rate and both paying an interest rate associated borrowing Bitcoin. Give you an example of that. What if I'm a company that believes that Bitcoin's going up, but we want to accumulate a big enough position that it'll move markets. So we choose not to do that because there's not enough liquidity in the market for us to take the position. What if we could borrow the position for a period of time where we get all the appreciation of the Bitcoin during that time frame, but still stays self-custody with the corporation that wants to offload it off their books for that certain period of time? Like, that's gonna happen 100%, because there's gonna be bets that are gonna be wanting to be placed, and there has to be a table to place them. And ingenuity of human financial systems isn't a new thing. We have a pretty rock solid blueprint to work off of, and it all is centered around time value of money. And we're a debt laden society. It's no different with Bitcoin. What are we going to do? We're going to use it to create more debt, and that's what we should do. That's really what it amounts to.
Yeah, and I mean, I think that's great that we say this and we talk about this, because again, a lot of people listening in don't understand what, I mean, we kind of throw around terms like financial products and, Bitcoin is a base layer and whatever, but a lot of people, I think, listening in don't actually understand just the kind of products and how many of there are just in our, outside of Bitcoin, our financial system, and how, like you said, staking is that thing, right? I mean, it's the same thing that we've already do with other things, right?
It's a CD.
This may seem like hyperbole, but if any of your listeners have the ability to at some point own and never sell a total of, let's call it 5 Bitcoin, that's the equivalent of buying, a commercial building in New York City, 50 years ago. Okay. Your ability to generate income off of it, loan against it, profit from it, 10 to 15 years from now, that 5 Bitcoin, you'll be able to do all the same things with it. So it is it's a remarkable opportunity with a hard asset that's digital, as opposed to, can you go buy a commercial building in New York City today? Not with the equivalent of, $250,000. Of course you can.
Well, and if you could, there wouldn't be any lending functionality or there wouldn't be a market behind it, right?
Right.
So when you're first adopter, you don't get the benefits of the ease of functionality and the integrated markets and the efficient markets and
Mhm.
all of those things you have to wait for with time and adoption. What's interesting, what's going to be really interesting to me is watching this new Texas Stock Exchange
Yes.
and how they. I personally think, this is just my 2 cents, that if you were going to take on an endeavor like that and get the BlackRocks of the world behind the endeavor, the same BlackRock that's behind the digital revolution of financial products, like, seems like you'd have a leg up if that were going to be the primary use for that market. And man, oh man, if you think about if that's their game plan, they really could put the traditional markets out of business. Like the New York Stock Exchange, like, over time would become less and less appealing and less viable. The liquidity is going to get sucked into the digital age, is the point.
Yeah, the New York Stock Exchange is at this point nothing more than a pretty cool looking museum that they host people on when they do IPOs. It's not a meaningful part of order flow anymore. It just isn't, because it's owned by the Intercontinental Exchange Company, which owns 90% of exchanges across the globe. The only big one that they don't own is the NASDAQ.
Yeah.
So this new venture by BlackRock and Citadel in Texas is going to force change on the industry. Period. End of story. They are already going to do it. And
it begs the question when Larry Fink says, yeah, the future of assets will all be tokenized.
Yeah.
Well, where will they be traded, Larry? Can you please tell us where those assets will be being swapped?
I want to know where are all the big desks and everybody going to find enough people to hire to trade 24/7? Because if we accept that that's where stock market is going, the stocks are going.
Well, remember, 77% of all trades are done algorithmically. So how many people do you actually need when you can have computers do it for you in the overnight, right? You can create code and you can create certain parameters that, keep, mind the store from 11 p.m. to 6 a.m.
The circuit breakers.
Yeah. So it'll be interesting. There's going to be change. It's going to be meaningful change. And it's just cool to watch. It's cool to watch innovation happen.
Yeah. And I think the important thing to take away from that then obviously is if there's going to be even more, coding going on and whatnot, we're going to see even greater percentage of the overall order flow going to that. And so the great reminder to retail that's listening in is, and that includes us, of course, on here, is that, we have to trade it differently. We have to be aware we're small fish. We have to look at the markets a bit differently than what those big players do as far as how those algorithms trade. Now, these guys right here, their company, again, guys, I always talk about it. You can go over and check it out, archpublic.com, right, guys?
Yes, thearchpublic.com.
Yeah. Archpublic.com. Okay, you check over there. These guys put together algorithms for the markets, guys. So, if that's something you're interested in, definitely check it out. Now, as always, I think understanding why markets move the way they do is a great thing. And of course, we teach that at Texas West Capital. But absolutely, you have to look. There's different ways to trade markets out there. But the most important thing, if you're retail, to understand is that you are retail. Okay. And retail doesn't move markets. Retail becomes the fuel that may get market movement going to get it started. But, that's basically the way it's looked at. So once you understand that, I think it kind of gets you out of this, oh, I'm so important thing, and go, okay, well, maybe I need to pay a little bit more attention to what they're actually doing and how they may approach the market. And then I need to trade based on that versus trade based on, I'm thinking that everybody's trading like me out there. So definitely something for you guys to look at there. As always, man, love having you guys on here. Love the insights and the discussions. Love the questions for the audience when they have them. As far as nation states are going to be buyers that would almost guarantee spot Bitcoin will always be higher than ETFs. Yeah, I mean, if they're going to get in there and buy, yeah, you're going to expect nation states are like that. They're not going to hold, it's not going to be about holding the ETFs if they have some strategic reserve or something. It's going to be holding actual Bitcoin. So yeah, if it gets to that point where you've got that and you've got kind of game theory going on there and the buying in that, we can expect it to continue to prop up spot price, and give it more of that disconnect as well. If I'm looking at it that way. So,
yeah, people don't know this, but there's already a world where spot Bitcoin ETF is somewhat disconnected even from cryptocurrency exchanges, because when you're going to buy in size or sell in size on OTC desks like Jump and Wintermute, that price is not going to be directly connected to spot prices,
right.
Because you're moving it in size. So they're taking a certain amount of risk. They know that if they then have to move that after they've purchased it or sold it to you and execute those trades, that it's going to move the market a certain percentage. So they're selling you at a discount or or at a higher price to make an adjustment for the transaction they have to do for you. So that already exists. It just doesn't exist, at a sizable percentage where people notice.
Yeah. Great point. I think that's where we can end this here. Man, hopefully you guys enjoyed this. Make sure that you're following Andrew here on Twitter there at AP_abacus. Of course, their ats are under the YouTube video here. You can follow Tillman at, I'm going to always, Texas
OL61.
Texas OL61. There we go. Again, don't listen to what I say. Listen to what I write there below the video. It's on there. Check out thearchpublic.com. Follow me, TX West Capital. And of course, check out what we're all offering here. We've got different ways to get involved in the markets if you're serious about getting involved in the markets. But I think these guys will tell you the same thing I'll tell you, which is if you're not really serious about it, if you like play pretend, serious, don't do it. Don't do it. Because you're just going to end up losing money. It doesn't matter what you're doing. Emotions are still going to play their part in there. But if you are serious about it, check out Texas West Capital, check out Arch Public, and get out there because, we're in there day in and day out kind of trading these markets. We've got experience. We approach it a little bit differently, but, again, you look at what works best for you. That's the important thing to get in there. All right. And other than that, buy Bitcoin and hold. Have some Bitcoin that you put aside that you never touch. It doesn't matter how much, just keep adding to it as time goes on. That's what I do. That's what these guys do here. And then, that's what Michael Saylor does, if that means anything to you. If you want to see how it works out over a few years. But anyway, as always, fantastic time here, guys. I appreciate you all joining. And for those who watching, we'll see you guys next Wednesday, same time, same place, 11 a.m. Central, 12 p.m. Eastern. And I'm sure Bitcoin will do something this week that we will be able to talk about for at least an hour next week as well. So y'all take care, trade safe out there, and we will see you guys. I guess next week, right?
See y'all.
All right, take care, guys.
Right.